And good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, August 9th, 2022. Interesting day in that the market did continue to drop lower. And that was started yesterday, during yesterday's session, I should say, and did continue today. Trading wasn't always as clean or as easy as one would think, that even in what appeared to be a stronger, more solid down move, there were a lot of fits and starts to it. So it wasn't as easy to get in and out with profit. So all account sizes really couldn't participate as neatly in today's moves. Nonetheless, I left off last night, and I'm going to just leave it here. This is all stays the same. Let me bring this into focus a little bit, where we're still running exactly both views, view number one and view number two. View number one is that this is minor wave one, and that we've just possibly completed minor wave two, and that we should begin to slide lower in a minor third wave. Alternatively, view number two suggests that the minor wave one level completed actually a minor five of intermediate wave C of primary wave A, suggesting that what we're launching higher in is the first leg up of an intermediate A wave, or to complete an intermediate A wave. And a couple of interpretations that we can have of that, even here in the NASDAQ, that this would be wave one, wave two, and then 1, 2, 3, 4, 5, wave three, a four, and a five. So this particular count is holding for right now. And for this to really mark the completion point for the minor wave two, that as I left off last night saying that I would want to then on the hourly chart be able to count 5 waves down. And I'm just going to tighten that up a little bit so that we can take a look at it and see the structure. So here's today's trade. That is yesterday's high. So that if we had 1, 2, and then 1, 2, 3, 4, 5 of 3, and a 4, we're likely still needing that fifth wave. I can stretch it, where I would go 1 and put the 2 here. I could do that, and then 1, 2, 3, 4, 5, 3, 4, 5. That could work, and I would tear it up and go down to the 15-minute to look for the internals. But for right now, I'm saying there is a possibility. Now, I'm giving the benefit of this doubt that right now this completes the third wave off of that high down, and this is a 4, and that tomorrow or overnight we'll get another slip lower, put in a new low underneath 12,966, and actually getting down closer to 12,900 to 12,868 into that area, putting in a cleaner wave 5, and then completing that first 5 waves down on the hourly chart, giving a lot of support to 13,419, having completed the minor wave 2 and or the intermediate wave A of an ongoing B wave. Now, if it is a minor wave 2, again, I want to reiterate that the requirement would be that this third wave will go down and put in a new low below 11,068, which is held since June the 16th. So I'd be looking for that to take place. If it is an intermediate B wave as a part of this primary B wave, which is a counter trend rally, then I'd be looking for a downside move, but I would not be looking for a new low below 11,068. In fact, I would suspect that that B wave should come in pretty much above, well above all of that. Now, what can we say about this first move down? What I often do is I put it on a line chart. It's a closed basis, and it really kind of cleans things up. And that's why I'm counting this is the 3, this is the 4, and we still need a 5 down. Right now, this is left, could be A, B, C. Now, tomorrow, magically, we got the CPI number before the market opens tomorrow. 8:30 Eastern, 5:30 Pacific in the AM. That number, and I look at how the S&P at the money straddle is trading. And right now it was trading, on offers, it's trading about $50. And so you're really kind of looking at, wow, that's a pretty big move. And to have all that insurance, right? You're looking for a lot of protection on the way up and the way down, 25 on each side. Now, so that would also say that the market is anticipating or is bracing itself for a pretty big reaction to the CPI. Now, we had a fairly strong reaction to the employment situation last Friday. They're kind of betting that we're likely going to get another strong reaction. I don't know if it's going to be similar. A similar, yes, but as strong, I don't know. Stronger, I don't know. We have to wait and see what the number actually is and how the market wants to read it. So that's out there. Right now, I'm kind of leaving this as 1, 2, 3, and this is the 4. We'll swing around and come back in and put in a new low. And again, below, I'm looking for something to drop below 12,900 and somewhere around 12,868. So right around in there, so to speak. And basically, I'm looking at that number right there, which is 833. It's even lower. So 25, and then this number is 84. So actually, they're 12,900, 12,884, 12,868. Somewhere down in there. Get a quick 5, clean 1, 2, 3, 4, 5 down, rally off of it in a second wave. And so that's what I'll be looking for. And hopefully we get it. We're looking for confirmation of that high being the endpoint. So what if it is this minor wave 2? Here are your fibs coming off. Again, as far as moving averages on the daily, come on. Moving averages on the daily, God, this is like, there, got it. On the daily, we are sitting we closed just above the daily 8. So daily 8 needs to break clear, then the 20, then the 50 EMA, and the 50 SMA. We have those at 12,520 and 12,230. Then we have fib support, 12,427, 11,814, 11,318, 10,822. Again, minor 3, we're looking for it to break 11,068. So it already projects that if it's a minor third, it will. And I would suspect that we might even get down to where wave 3 is equal to or slightly larger, but I'm looking at 87, 88, which is the 50% mark of the entire cycle wave 5 rally. So, and that would go from the 2003 low to the 2021 high, 2021, 2022, that high. That's a large period. And so this 50% would show that it's so far off of that all-time high down to that level is a 50% retracement of the entire rally from the last 19 years. So, and if it stops there, minor 3, get a minor 4 and a minor 5, and I'm still now looking for this is the 2020 lows area. So we have 6905, 6622. I like that. That's a zone that likely may complete. Minor 5, intermediate wave C, primary wave A. Then we get that magnificent large rally. And that would take us again back up past where we are right now, back up towards 14,000, 15,000. And it'll be dynamic, pretty much like we've seen here, but I think on a higher degree. I think on a much higher degree. Same count type thing. We're going to be looking for intermediate wave A, intermediate wave B, intermediate wave C to form primary wave B. But more on that as it starts to happen. Right now, let's keep our focus on what we can expect for tomorrow. Use your moving averages. If they start to break down, look for a trend change as well as a pickup in the pressure to sell. That's what it will be telling you. If we break the 8 on the daily, if we break the 20 on the daily, if we break that 50 on the daily, it's a huge move. It's a 500-point move from where we are. 500-point move to get down to the 50 EMA. Can it happen? Yes. Would I expect it? Not really. But I'm always like, wow, look at the market. It's up 500. Wow, look at the market. It's down 500. So trade the price action. Trade really what's happening in front of you. Keep an eye on your moving averages. Keep an eye on Fibonacci. Keep an eye on support and resistance. Keep an eye on the market profile. It's going to give you a lot of information of where things are. And again, supply and demand is going to make sense, whether it's coming on the sell side or it's coming on the buy side. That's the demand. The demand is to find buyers because I got stuff to sell. Or the demand is to find sellers because I got stuff to buy. So it's supply and demand. And they will go to what I continue to call a value area. And that value area is nothing more than where the buyer and the seller can meet and transact business. You know, I got my position, you got your position, boom, we exchange money, thank you, goodbye, off to the next order. So, but keeping in mind that markets are quantitatively driven, all right? Algorithms rule the day, and algorithms are programmed to also include market profile. Points of control, value area high, value area low. And as it changes, so do calculations that go into the algorithms and as to how high they can buy it or where it would go. So this is an ongoing process and it changes as and with the market changing. Okay, so be prepared, both sides. Both sides. There's enough spin going on as well that basically they're trying to say, hey, bad news is good news. We've bottomed, the markets are rallying, the Fed's inflation, they're gonna show that it's really under control. Now that's contrary to what just about every Fed governor's been saying since the release of the unemployment situation number, that it showed. Again, let me say, it showed that 538,000 people returned to work. Now, there are reports and they're on like Zero Hedge stating that that was mostly on a spreadsheet, not really in reality. Whether it was on a spreadsheet or whether it was in reality, the number was correctly represented in terms of what the market's reaction was, because it was inflationary. Higher employment does not equate to lower inflation. So, but it's good news that 538,000 people went back to work, if indeed that's the case. And it's good news because they're going to be contributing to the tax base of the cities and counties where they live, of the state where they live, and to the federal government. So tax revenue, I don't know any municipality or state or federal government that doesn't need it, particularly when we just passed another package that's going to put more people back to work, but yet cost trillions of dollars. And that's actually bullish at its core as well. But we got to get it all out, got to implement it, got to factor in corporate taxes going up, et cetera, et cetera. So none of that's happened yet. Let's focus on the market. Focus on what that inflation number is going to show. And try to live in reality and not by the pundits and what they say and what they're trying to say. We can follow the market. You can trade it. If they want to talk about that as bottom, fine, let it bottom. My count gives both sides. And I get called wishy-washy. I get called useless. I get called, why would anybody want that information? It's because they're putting on positions that reflect it and they're making money. That would be one reason. And also, it just provides a little bit of groundwork here for what the possibilities are. And if you're a day trader, you're following price action. So here's what could happen, and here's where it could accelerate, and this is what might cause it. That's why. All right, so tomorrow, upside, if it really starts to go, folks, I'd be looking for this thing to get back above 13,419 pretty quick. And that's a $400 move, 350, $400 move, and I would expect it to keep on going. You got the daily 200 EMA sits at 13,568. The daily SMA 200 sits at 14,000, almost 14,100. Those are gigantic moves. I would actually be like, wow, look at the markets at 13,500. Should it occur because it's a 455 point move. Is it possible? Yes. Have we seen moves like that before? We sure have, both up and down. And that's where I'm going to leave it. Stay on your toes, stay aware, use the moving averages, use the Fibonacci, use the Elliott, use the order flow market profile, and all of the indicators that come with it. Have a great trading day tomorrow. Remember CPI, 8:30 Eastern. Our next update will be on Wednesday, October the 10th.